Hello and welcome to our anniversary special, Market Masters. Why are we calling it Market Masters? Because my guests on the show today are indeed masters of their craft, and let me make it public that if a pedestal of great stock pickers has to be made, Akash Prakash and Manish Chokhani, they are two names, they will certainly find the mention. So let me introduce them. Akash Prakash needs your introduction. Manish Chokhani, I don't know how should I introduce you. Banker, investor, broker, or now singer?
Confused man.
Who gets the investments right, which is very important. So Manish, 2016 so far has been a year of twists and turns. In February, we were discussing that this is end of the world. Now looks like there are no concerns in the world.
So I said that even then, and I continue to say that I think post this blow up in the world in 2008, and with the unleashing of money, we are in a schizophrenic world, where every 6 months we alternate from bouts of despair to bouts of complete euphoria, where one time you think, like you said, in February, it seemed the world's going to come to an end. And right now it seems like India can do no wrong. Of course, the world still looks fairly gloomy. And that's the nature of what the world economy is. And there is a full rebalancing which has to happen across markets, not only in stock markets, but in currency markets as well. And I think that's where the next big moves will come from.
Akash, normally trends when they start, they last for years. Bull markets, they are a multi-year trend. Bear market, it's a multi-year trend. In this year, we've seen a mini sell-off and a monster rally. Are cycles really getting compressed?
No, I still think India, like Manish has alluded to, I think India is in a bull market, and I think that it's still a long way to go. I think these are global factors, China, Brexit, negative interest rates, which are causing all these short-term pain. I think India, has a real shot for the bull market to continue and accelerate in India. So I don't think the cycles are compressing. I think they're more volatile. And there's noise within the long-term cycle that India, I think, is going to do and is well poised to do well.
Manish, 2008 experience has told us that yes, it's great to be different, but in an equity market where the world is flat, it's hard to be different. When global growth is compressing, equity as an asset class is unlikely to do well because growth and demand is still a concern. So can equities do well? And within that, India may outperform, but the general uptrend may not be that powerful.
I think that's fair what you're saying, that when it rains you get wet. So this whole thing of decoupling we saw in 2008 doesn't really work. And India this year of course is looking great post the budget really, where we started anticipating the monsoon. Then you started getting the reform process, you started getting domestic money in. And it's been actually FII flows this year have been $3 billion, something like that. So it's not like the world has been rushing in to pour money into India. So while a lot of smart money in the world sees India as the next big hope for the world, and I think we are now already 7th largest economy, and we were speaking briefly earlier also about how in almost large sectors, Indian companies have become 20, 30, 40, 50% of the comparable global counterparts, which means the markets are suggesting this is the next growth frontier. Certainly if you get events like Brexit, you get another major economy blowing up, you get disruptions in the currency or bond markets, we will get a sell-off over here. And therefore, it's best to be in high-quality defensive names, which, as you look out 3, 4, 5 years, these will be assets of strategic value, whose valuations will only keep going up. And that's really the best way to position yourself.
So I'll talk about valuations, Akash, but for the moment, the fear around Brexit seems to be real. 6 weeks ago, we thought it would be a routine vote and markets would move on, but looks like now there is a binary event in making. The fear of unknown is haunting us. So do you think the Brexit fear is real?
Oh yeah, definitely. I think Manish, I'm sure I has friends. I also have friends in London. I think it's really a genuine touch and go. I think we're not going to read why. I think the Remain campaign has handled it very badly, and it's not the show to get into those details, but I think it's a genuine risk. I think if it does happen, I think the risk is really that the potential disintegration of Europe, which we thought would happen with Greece exiting, which came close but never happened, may actually happen here. Because, if the UK decides to, we don't want this common movement of people and we don't want this common market. Tomorrow Netherlands may say it, and then Germany, XYZ may say it.
Yeah.
So I think you open a Pandora's box, a can of worms, very unclear. I don't think it's necessarily that negative for Europe as a whole, but for UK as a whole. But it opens a real can of worms as to what is the new avatar under which the European Union will now, function and going forward, and that's unclear and unknown. So I think the real worry on Brexit is not so much just the impact on UK, which is of course there, but is it the beginning of the disintegration of Europe, which is a much bigger deal.
That's right.
Yeah.
Yeah, I mean, UK as an economy, frankly, is not that big a deal for the world. It's really implications on financial markets, which and how things get disrupted, and other dislocations from time to time.
Yeah.
And he's right. I mean, the European experiment in some sense has failed.
Yeah, clearly.
It's a matter of time before it will unravel. Now, whether it should have unraveled 4 years ago, whether it will unravel in the next 4 years, the fact is all these economies are old, mature, demographics are bad, and therefore they won't get the growth which they've been used to. They can't remain at the standard of living they're used to, and in that you end up becoming more and more tribal. That kill the immigrant, stop someone else from coming in. Why is this new guy getting a job? And what used to become a movement towards centralization and becoming large becomes a movement towards, let me at least guard my own turf and my own house and forget the rest. And it's happening across the world. When you see elections even in the US, the rise of Donald Trump is really suggesting something similar over there as well. States in the US have already started having those conversations. So it's a generic move in the world back towards socialism, that kind of electorate voting.
It's not the end of capitalism.
It's not the end of capitalism, because you still have the nationalists, coming up. But capitalism, the way we know it, the Anglo-Saxon way, is under attack, including in the US. And there is this 2, 3, 4, 5% rich guys in the world who are not the ones who go and vote. And the votes are coming from somewhere else. So it's a interesting period of churn where the old leadership has to transition out. New leadership has to emerge. India looks like it is the new leadership. Certainly Prime Minister Modi is one of the tallest leaders in the world today. So we have the characteristics of getting up there. But as in any transition, when UK handed over leadership to the US earlier in last century, it wasn't without pain. So it won't be without pain in this century as well.
Akash, let's talk about the current market. PSU banks are technically out of the Nifty now. You've got private banks which are occupying large outside space. What are your thoughts there? I mean, if you're bullish on government action, a lot of good work is also happening for PSU banks, whether it is cleaning up of the books or whether it are measures like bankruptcy law. So do you think that is one space outsized gains would be made? Because markets love to hit PSU banks.
Yeah, I mean, eventually yes. I think there will be probably a narrow, maybe State Bank, Bank of Baroda, one or two more PSU banks who will be potentially investable. But these are recap stories, right? So the fundamental law of investing is you only come in the final recap. You never come before it's fully recapped. So I think we're still in the stage where they're going to get recapped, right? So I think what Mr. Vinod Rai is doing in the Bank Boards Bureau sounds like pretty effective. He's got a good game plan. He's a very effective individual. And so I think he will do a good job. But this is a long story. It's going to take time, right? Because there are lots of structural challenges they need to do. And the problem is they all are undercapitalized, in my opinion, if you fully account for what the asset quality is. So if there is, say, sometime in the next 2 to 3 years, we've seen the change in what Mr. Rai has been able to do in the Bank Boards Bureau, change in board, change in management, change in incentive structure, cleaning up of the books, and there is a big recap then. Yes, I would look at that very closely. I think it might be a good, change in management might be a good situation.
I mean, actually, you're saying if they cease being PSU banks, then we want to buy them. So why are you not buying the private banks anyway?
Effectively.
But Manish, again, private banks, they've been great compounding machines. And HDFC Bank, Kotak Mahindra Bank, they managed to, grow in a very tough environment. But 4 times book for HDFC Bank, 4.5 times book for Kotak Mahindra Bank.
I've made this mistake for 20 years. I think Akash has been better than me in this.
No, I've made this as well.
Every time we think HDFC Bank is expensive and we look after 1 year, it's already up 20-25%. It's not going to get cheap if it's the best franchise in this country. And you have 70% market share to take in a growing market. Why are you overthinking and overanalyzing it? And what is the case for the multiple to compress over there? Let's argue the other way. So if it keeps making its ROE and the multiple holds, you'll make the ROE. And the ROE is 20, it's not bad.
But you may not see an expansion. I mean, it will be a terminal growth of 14-15%.
I'd rather have, like you say, you get 20% compounded over 4 years, as opposed to, 3 years you go flat in a PSU and in the 4th year you get a double. Your end point is the same, and along the way at least you don't get heart attacks. What's going on?
Fair point.
Like there was this case yesterday of my favorite old State Bank Bikaner, Travancore, which for years I bought them fortunately very cheap and then sold them, waiting for this merger. It's happened 7 years late. if I'd kept holding for 6 years, waiting this will come, sure, it's exciting. 2 days you get 20% circuit up, but what about the 6 years which we lost?
It averages out there.
So, big deal.
Fair point. Akash, the way you invest is that you always look at businesses which are going through a temporary slowdown, where markets, they misprice growth, where perception is beaten down, and the ability of the business brings the business right up. So where is this mispricing in this market, where great businesses are suffering because of cycle or because of other factors?
Well, this market is tough now, I think, because the problem is that I think there's been a big move to quality, right? So I think Manish, all of us have learned the hard way that, in India especially so, you have to invest in quality businesses and franchises. I think the problem today is any company which has a good track record of quality and profitability is very expensive, right? So, I mean, there may be some which are off the radar which we don't know, but by and large, right, are the well-known ones. So you have to go where either your perception of their quality is different from the market. So, business which has mediocre returns in the past, but something is changing or management is changing or something. So it is a more challenging market. I think the problem, while I think all of us and I still remain quite optimistic on the market in India, to come down to specific stocks is a challenge. I wouldn't pretend that it's not. I mean, it is. You can still find pockets, and Manish is right, and can you buy 5-6 companies? Yes. But can you deploy large chunks of capital? No. And even those 5-6 companies, you have to be a little bit away from the standard. It's not going to be in the standard numbers, right? Yeah. So I don't want to get into specific names because frankly, some stuff we may be buying right now or we're not aware, but I think
we've talked about some stuff on the previous shows, like Federal Bank, Mahindra Financial.
Federal we talked about, Federal we'll see. I mean, hopefully we're right. I mean, we're still early. I mean, the market clearly doesn't believe that. I mean, Federal is exactly that. It's a situation where that it's a company or bank which we think is undergoing transformation. The market thought so 6 years ago. The transformation didn't happen. Market's tired, frustrated, and given up. We think that the transformation is now going to come because they've done additional things and they've had some bad luck. If we're right, we'll do very well. If we're wrong, we'll lose some money, but I think the downside is limited there. But that's a classic case where we are taking a different view because our time horizon is different and people are tired and fed up there.
But some of your bets and some of your outsized bets which have done well for you, Chola, Mahindra Financial. So are you picking your spots in the NBFC space because PSU banks are vacating a lot of pockets? They don't want to get into a lot of pockets, and Indians, they want financing in those pockets.
Yeah, see, I mean, our thesis has been and remains so that Indian financials are an extraordinary opportunity. I think Manish has alluded to this, right? I think in a simple equation, right? The economy will grow at 12-13% nominal GDP. Credit penetration is low, so credit will grow at 15 or 17% for the system. 70% of your banks, which are PSUs, can't lend beyond 7-8%. That means any financial institution which is well capitalized, has a competitive cost of funds, and can underwrite and originate in a proper risk-adjusted fashion, can grow at 25%. Yep. I mean, just simple maths, right? So that's why we've been so positive on all this stuff, and they've all thankfully done well.
How else one can participate in Indian financials? Because that's the meaty part of the market.
So lots of things are there, no? So housing finance, for example, is a whole big area. Then we've done things like, say, Bajaj Finance in the consumer finance area. You have equipment finance, the Shrirams and the Sundarams of the world. You now have the microfinance sector, which is really in euphoric stage currently. So it's just going to keep expanding. And like I said, today I think 30% of our indices are weighed towards financials. The composition of that will change. It's not like this will become 50%, but it's not like 30% of the market weight will go to 20% either. So it's the best place to stay, to have substantial chunk of your money. I think we may have slight dissonance or disagreement today is on tech. Yeah. That our tech shares have got, I think, beaten up a bit unfairly because they're projecting today, say, 10% growth. They are in a cusp of transformation, and there is re-engineering happening there because with the use of AI and tools like that, you won't need those people. So is there a case for margin expansion, which some of the CEOs have alluded to? Now,
like Sikka.
Yeah, like Akash says, I can make money if my time horizon is different from the market, or I find something which is not in the mainstream market. These are the two big ways to make money.
Correct.
So in the large caps, whether it's the Infosys and TCSs of the world, do you have a duration where frankly these are global companies now. TCS market cap is same as Accenture. No. Infosys is ahead of Cognizant, but these four are really at the vanguard of the changes happening in the tech world. There's just IBM, which is playing the Watson game, which Infosys also is trying to sort of recreate. if these indeed become mainstream global companies, what happens to them? They won't remain where they are, and they won't be priced the way we are pricing them today. So there is a case for change there. Again, like I say, my time horizon may be very different from the average investor, and it pays to be patient in franchises like this. You don't get quality companies like this very easily at the multiples they are currently at. Similarly, housing finance, I think HDFC has suffered for years, and the smaller ones have run much faster.
Yes.
But there may be interesting things happening in that space. There will be insurance listing, for example, coming. There may be asset management companies getting listed. So there is interesting things happening in good companies which have become kind of boring, sort of discarded. Oh, there's nothing new. But you don't have to keep reinventing the wheel every time. Sometimes the old favorites actually do very well.
That's true.
But the new reboot at Infosys or at TCS, Chandra told me openly on a public forum that the digital business is growing at an outstanding rate of 50%.
Sure.
That's an amazing rate. Sure. But can that really move needle for such large companies?
See, that's what I'm saying. Even like I said in pharma, it may be 5% of the business today. What will happen is 3 years from now, there'll be a moment when you'll suddenly wake up and say, oh my gosh, this is so interesting.
Yes.
Like when we used to do Hindustan Lever in the old days, and we said detergents and soaps is over. Then one year the market got excited on personal products and re-rated the whole company.
Then the food category.
And then they went into food, and then they got into squeezing working capital, releasing cash, their buyback, their dividend out. So there's a lot of things which happen in a good company, which it's like you say, do you want to be in a melting ice cream, which is a lot of these bad companies where you want the last thing, but time is your enemy. Whereas in the good company, time is the friend of your business. And why do you want to give these up so easily? And surely there are worse things in the market than some of these names.
Surely. Akash, so 3 years, 4 years, what do you think the shape of IT could be from a market standpoint?
No, I agree, Manish. I think there's not much distance there. I think that but I think where me and Manish agree is that this industry is going through an inflection point in the sense that stuff is alluding to the old classic for lack with
the linear
arbitrage,
model.
Labor arbitrage, linear model is changing, and I think Infosys, to their credit, was called this out very early. I think what's going to happen is going to be big differentiation in IT in the sense that Infosys may make it if Mr. Sikka's publicly stated targets and goals are anywhere near that. That's a big. The stock is not going to trade here if he delivers 20 billion top line and
even 80% of that.
80% of that. That's clear.
That's a complete reboot.
Yeah,
even
complete
Wipro,
reboot.
very tall orders, but if he achieves them, I mean, the stock should not trade here.
Correct. So Manish is right. The only thing I would say is that there's going to be a winnowing between everyone is not going to make the cut.
That's right.
Right. So I mean, I don't know. So there are like 8-10 large Indian IT services companies. Will all 8-10 make the cut? Definitely not. That you can say for sure. Now 2-3 will. You have to be smart enough.
Which have the strong chance?
That I'm not going to get into.
Generally, I mean, these are large companies.
Buy his fund.
That's not open to Indians.
No, not open to Indians. No, I mean, to be frank, I think Infosys will make the cut. I think that Mr. Sikka has been very early. I think he is a visionary on technology. He seems to now have really charged up the organization, the feed scuttle, but we get from the company is that there's a lot of enthusiasm, momentum inside the company. I think they have a good shot. Chandra clearly have an outstanding track record. I think TCS will make it. I mean, the feedback we have is that they are again, they're maybe more quiet, less vocal about it than Infosys, but not doing anything dramatically less or in no way inferior to Infi. These two I'm pretty confident will make the cut. The rest, frankly, I don't know. I think one or two smaller companies which today we don't talk about or we don't even know will make the transition. Will the middle make it? I don't know.
Manish, the India romance, let's be real, is the consumer. The millennials, the Generation X, we know per capita is going to go higher, we will spend more, we will eat out more, and we will travel more.
Right.
Indian consumer stocks are expensive. How do you see the face of consumer sector and stocks changing?
No, see, again you say consumer stocks as in FMCG. But when I'm consuming, I'm buying media, I'm buying telecom, I'm buying cars, I'm buying refrigerators, I'm buying ceramic tiles. There is a larger, wider basket. You're right that even if I look across at, say, Havells or Crompton Greaves Consumer or Kajaria Ceramics,
they are consumers.
They are consumer stocks.
Expensive.
They are expensive. I don't disagree there. But don't focus your attention only to the FMCG names. Also, there's enough work, I know, at least I'm involved in doing in creating new companies in the space because ways of consumption are also changing. And some of these companies will come out and surprise because, like he's alluding to Federal Bank being a change story. There was Ratnakar Bank which transformed into RBL, which will have an IPO and it will, already be a large company by the time it comes out. So there is interesting things in the private domain as well. It may not be for the average investor, but again, the average investor shouldn't be buying stocks directly. They should be buying the mutual funds. And the funds, frankly, in India have done a good job. They bought the Eicher Motors and the Page Industries very, very early, and the funds have compounded and done really well.
They managed to beat the
So
benchmark.
there is enough things out there for someone who is patient and wants to look. I don't think we should just worry about the headline indices. And if you're that sort of investor, just go into a fund.
Akash, since anniversary is a theme, I'm going to take the clock really forward. 7 years ago, when we launched the channel, I knew Amazon existed, but I was not shopping online. And I frankly don't know last time when I went to a mall and bought something. Sure. So the face of transaction has changed. My per capita spend may have not changed, but the way I'm consuming or buying has changed. So within the consumption space, what could be an outsized trend? What could be a disruptive trend?
I think the symptoms are clear. I mean, obviously digital online is very well known, but I think it's a classic thing, like the basket will change, right? So, if you look at China today, for example, travel tourism is a huge theme in China, right? It'll happen in India. Healthcare is a huge theme in China. I think this is an easy one, but just look at China. It's 10 years ahead of India, effectively. 10 to 15 years, depending on which data you look at. See what their consumption baskets today and look where India is today. And you'll see the deltas. Like Manish points out, 2.5 million cars, 22 million cars. It's a factor of 8. You look at, mobile is actually more in line. Yeah. But you look at, look at travel and tourism, the factor of 50. Look at healthcare, the factor of 20x. So I think it's, and these are all Jacob, as Manish points out, right? And when these things accelerate, they go like this. So I think that's a very simple thing to look at. Obviously, there's some cultural differences and things will change. But, I totally agree with Manish is saying. There will be many sectors, many things where in the next 5-10 years, it'll be up 5x in the next 10 years, right? So it could happen in many sectors. I think the differentiation and why, I think India has been a good market, as you guys both allude to, for active stock picking, is there will be a lot of corporate differentiation. Every company in India will not execute. India is a tough place to execute. So why I think funds have been able to do well or reasonably okay in India is because if you've been able to identify who can execute, like, everyone talks about HDFC Bank, but you realize that of those first 8 who got licenses, 7 shut. Shut or got sold, got merged. Only HDFC Bank executed, right? If some HDFC Bank baat karte, but that's Aditya Puri and the board and Paresh and the whole team. Sure. It's not that this is a God-given and everybody and uncle I could have gone and executed. Sure. I would have guaranteed bombed it if I had not
So I'll tell you the folktales. When I talked to some of my friends on the record, off the record, they said Amansa is doing well because you bought Eicher. Amansa is doing well because you bought Ashok Leyland at the right time. Right. So the general question is that what could be the next Eicher? What could be that big outsized bet? It's difficult to point out today.
We know it after it goes up.
Yeah, exactly.
Not when we buy.
No, in fact, to ask you a question, people have asked me this question. That, I told them, look, if I actually knew that Royal Enfield would be selling 600,000 vehicles, I would only buy Eicher. Right. No, why would I buy any other stock in the fund? I mean, so obviously by definition it's all post fact. No, I mean, I wish I knew before.
Sure, we would have had 20%.
Yeah, 20% of the fund. Why would I have only have 5-6%?
In hindsight, the vision looks 6/6. I'm completely with you.
And also the luck. Also, to be fair, you can't assume that we have such brilliance. I mean, I don't think you should assume that.
Do you think it's important to check the asset allocation? Indians, we love to own gold. 90% of our assets is still in real estate. We want to buy equities. The eagerness, frankly, a couple of years ago was not there. Now the desire is there, but the action is still not there.
Given the demographics of our population, how young the people are, the visibility they have on salaries and growth and income, our weighted on equity is very low. And I wrote the article on saying the comparison between 1982 in the US, the problem is valuation, but otherwise it's uncanny. The macro is better, corporate profit is at the bottom, productivity expansion is coming. You're having
rates are headed down.
You're having significant retailization, asset allocation. The point you made. So I think, as I said, you must have got to ask yourself this question, right? Do they fundamentally believe that India is on the right track in the next 5 or 10 years? If they do, then every correction is a buying opportunity. That's the way I look at it. That's how we are running the portfolio. Now, whether our broad thesis is right or wrong, time will tell, but I feel confident on that.
And equities has to be money which you can forget about for 3 to 5 years. If we keep looking and monitoring every month to month, I mean, there are stocks which, like him, if we buy 2, 3, 4% of a company and you actually don't look at it for 2-3 years, you get surprised when you look at it 3 years later at how well it's done. Because, I mean, like we did say Chola or say Bajaj Finance or something, it's like 10x. I don't think when we went in, we thought it can be like that.
I have a list of stocks which are up more than 80x in last 7 years. From IndoCount.
If IndoCount again is like a friend who came last year, he himself must have not believed that 50 rupees can become 1200 rupees.
So
Welspun is up how much?
That's the power of compounding. I mean, I'm
absolutely.
looking at a stock like Ajanta Farm, unbelievable returns. You have to check the zeros to identify that such a multiplier effect could happen.
Absolutely.
So that's the broader message that, believe in the India story. Stay put in equities. Whether it's Brexit a year ago, whether it is Brexit this year, noises will always be there. And when there is a noisy environment, you should be a buyer.
When the rich old uncles in the world are in trouble, go and get the young date.
That's it on the special edition of Market Masters. Thank you for tuning in and thank you for watching the show.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNow Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.